Let's do thread breakdowns by using the Falcon FX method. And before that, if you guys don't have the Falcon contents like the Falcon mechanics, the 4-hour, the reward, and also the new latest hybrid trading, all you have to do is message me on the Telegram Manos Falcon or simply scan this code. So, and you will get all of those contents for a small amount of fee. That's it, guys. So let's break down from this get CSF, and let's see. On the daily time frame, we just got directed from this big value point, right? So we're looking for short from this point, and first thing first, we have to wait for the H4 time frame for the confirmation. As we can see, we go to confirmation right there, and then we move to the H1 time frame, and then from the H1 time frame we did get reacted, but the way the price get reacted is very corrective in nature, right? As we can see, a three-days continuation structure which has passed over 50% of the Fibonacci retracement, always hit the 90% point, and then we are waiting for an insurance entry from this point, something like this, right? As we can see, we clearly get the exact thing that we wanted on the H1 time frame, a two-day structure that can be seen on the H1 time frame. That means the trade must be taken on H1 time frame. If we have a clear middle section in it, it can be taken on the 15-minute candle also. And in this case, we do have some good amount of middle section, 1 2 3, right? And it is not the worst one, but let's see on the 5-minute time frame we have some. No, we don't have a clear middle section, so we just have to wait for the H1 retracement candle, which is exactly what we got there, and your stop loss will be around here. So yeah, that's a lovely trade, which the price is corrected from this main value point, and then we got corrected as a impulse correction impulse, and we are catching the trade by using the insurance entry right from here. So yeah, a lovely trade, low risk trade, high in the run, and then it just moves to the downside like crazy. So moving to the next one, AUDJP. So this three trade, AUDGP, AUDCHF, AUDCAT, they all played out within the same time. So you have to choose the best one. You have to choose the better pairs, better structure to take this kind of trade. As we can see on the daily time frame, we just got corrected from there, right? On the AFDCHA, we got corrected from there. The price moved to the downside, as you can see there. But on the H4 time frame, we just got corrected from there, right? So a buy is coming up, and also on the LDCAT, we just go directly from there, from this point, 1 2 3 1 2 3, right? So we're looking for buys. The bias is bias, right? So in the H1 time frame, as we can see, the price just go directly from this main value point, and then it is forming the structure impulse correction impulse, right? So let's see in the 15 time frame, we can clearly see the structure. But the only bad thing about this trade, this structure, is that it is pass over the 50% mark if we take this week. But if we don't take that week, it is like 55. I think it is good enough to take this trade. But on the next pair, we can clearly see that we just go directly from this point, and as soon as the price moves to the upside, we can look for an insurance entry from there to move to the downside, right? And that rule same applies to this one here. If if you think this trade is a bit of like a riskier trade because it has passed over that 50% range a bit, and and also it has closed below this point, right, as you can see there. Then you can simply wait for a push up and then an insurance entry from there. And what's happening on the AUDGP, exactly the same thing. We got reacted from this big points right there, big daily font, and then the price moved to the upside like this, right? So let me zoom in a bit. And so yeah, this was here, price got reacted from there. It is a 3 days continuation structure, as we can see there also, like the 1 does, 2 does, 3 does, right? It fails to move to the downside and then push up to the upside, right? And then we can look for entry after that. As we can see, clear structure, almost very similar to that of the last two pairs. What all we're waiting for is impulse, correction, impulse. So you have to choose the better pair. And in my case, I choose the AD CHF because this looks better. Which is corrected from there, but AD cat is looks absolutely fucking stunning. So yeah, the choice is yours, bro. So we can clearly see there impulse, correction, impulse, and all I did was take the entry right there. Stop loss is around there. So yeah, that's it. And I got out by 4.5 right there, around 4%. Just close the trades right after it. I'm happy with it. So all is over. So let's move to the last pair, USD JV. I took a loss, I think, yeah. As we can see, and this one is a for heights for structure, so I will be always looking on the heights for time frame. As we can see here, price move to upside, impulse correction, impulse correction, impulse. I was looking to take a long from this point, but the way the price got, the way the market got reacted, it is a bit weird. Is that we just broke through this point and then we are forming a short structure. Means my bias has sense to from long to short, right? So all I was waiting for right now is that a short from this point. And on the 15-minute time frame, as we can see, we have a clear middle section where 1 2 3 1 2 3, right? So we can use the 15-minute time frame as an entry. So that's it. I use it. I took the trade right there, and I took a break even on this trade, lovely one. And then I took the second trade on this one. As we can see, as we can see, 1 2 3 3 this continuation structure, right? Much better than the last one. We just go right there from this point, and I took it right there, and that was a fast loss. Take me in, take me out. It happens sometimes. So yeah, that's it for the video, guys.